Hello, everyone. Today I'm going to start recording Chapter 6. Now, when it comes to personal automobile insurance, there is so much going on, and I don't want to rush this. I want to take my time. So, what I've decided to do is to divide this chapter into 4 parts, if you don't mind. Okay. We need to take our time, and I don't want to give you a list of, for example, what the statutory conditions. That's not sufficient for me. I need to explain what each statutory condition is. So, in the exam, you will have a good knowledge to answer any questions. Okay. I'm sorry, I had a long day today and a lot of training, and I usually do this recording if I find the time late in the evening, so you can see that I'm almost losing my voice. Anyway, that's not a problem. So the class is being recorded here, not the class. the the lecture is being recorded. I can see that, and my microphone is on. Okay. So if I haven't earned your subscription, and I don't know what else I need to do, you let me know in the comments. And if you think that I've earned your subscription, please click on subscribe. And with that, let's move on. All right. So what we're going to go through in this part 1 is the coverages, the major coverages that are included in all the automobile policies in Ontario. So in a nutshell, there are 5 coverages. So these are the core coverages in the automobile policy, but one of them is optional, and the first 4 are mandatory. Every policy in Ontario must have those 4 coverages. The first one of that is third-party liability coverage. So you want to be able to explain to your customers how this works. You can do this like in less than 1 minute, okay? Designed to provide protection for the legal liability imposed by law upon the insured, the customer, for bodily injury or death of any persons or damage to property belonging to other persons arising out of the ownership, use, or operation of an automobile. So basically what it's saying is, I usually want to give you the textbook definition and then just give you my own little version. If your customer is being negligent and he caused either bodily injury or property damage to others, you see the others is very important. That's what's called third-party liability. It's always about a third party. So either he caused bodily injury or property damage to others, and it's so bad, they take him to court and they're looking for compensation. If that happens, then the third-party liability coverage on your customer's policy will respond. Okay, that is the purpose of this coverage in a nutshell. So with the exception of Quebec, the minimum third-party liability limit is 200,000, pretty much in all provinces, except in Quebec, it's only 50,000. It's a whole different story. I don't want to digress here, but pretty much all the other provinces and territories, the minimum everybody should have is 200,000. Now, if you look at any policy in Ontario, the minimum has actually become 1 million. It's not mandated by the province, but pretty much everybody has at least 1 million coverage, okay? All right. So what is this? One more point about the third-party liability coverage. When you're talking to your customers, always make it a point to offer them more than 1 million. And why is that? For a few reasons. One, the lawsuits, we notice that numbers are coming from the industry. The lawsuits are increasing. The judges are handing out more than 1 million. Now, today in Ontario, most of the lawsuits in the last 3 to 4 years, it's between $1.5 to $2 million verdict. Okay, so you will be doing a service to your customers by offering more than 1 million. And the second reason is it's very cheap. Now, I have 2 million coverage on my automobile policy, so I'm paying $36 per year, not per month, per year, for the extra $1 million. And just imagine, you're driving a car every single day, and then you have 1 extra million coverage to protect you in a lawsuit situation. So you have a total of 2 million, and you're paying just like, if you tell your customer it'll be, Mr. Customer, less than $100, if you're not able to do a quote, your brokerage doesn't allow you to do a quote, then you can tell them if it'll be a less than $100, you will not be wrong. Okay. And if they don't want to purchase the 2 million, documented. Offered customer more than 1 million, but customer declined to purchase. It'll protect you. Okay, so we got into a lot of problem. The brokers, they don't offer, and then one customer was sued for $1.8 million, and then he was able to prove that the broker never offered him $2 million. So we were out of pocket for $800,000. Okay, so in any case, just make a note of that. To offer always more than 1 million coverage. Okay. What are the priority of payments? So let's say you have the minimum third-party liability coverage in your policy, and so you sued somebody. When I say you, let's say your customer sued somebody, and then the customer is now getting paid the whole amount, okay, for 200,000. So he's getting paid the whole amount. So let's say that the maximum amount of coverage on your policy, on your customer's policy, and he sued somebody, and then for bodily injury and property damage. Okay, I mean, that's the time you sue somebody, mainly for bodily injury. So what the law is saying, the priority of payments, if the full amount has been exhausted and it's been paid out, you can just go and go to the dealership and get a brand new car. Okay, so many people are doing that. So they are physically hurt, but then they want to have a brand new car first from this amount. So what the law says, the priority of payment, no. You have to spend 95% of the 200,000, so 190,000 for bodily injury. That means take care of yourself first. Then go and look for a car. Only 5%, okay, you can use for property damage. Because people sometimes, they don't set the right priority. So that's why a system that specifies how much of the minimum policy limit will apply to bodily injury claims, so in this case 95%, and how much will apply to property damages claim if there is not enough insurance to cover all the combined claims. Okay, so let's say you sued somebody for $500,000. Okay, but then so you only, the maximum limit available is only $200,000. Okay, there's no other recourse. Okay, so then you're already running short of money for your trouble. Then why would you go and just buy a new car, okay, and spend it on all these things on a property than taking care of your bodily injury? I hope that makes sense. Okay, so because some of us, we don't prioritize correctly. We want to drive the flashy cars and everything, right? The law says no, take care of yourself first. Okay. Now, the accident benefit coverage, you got to be very, very careful when you're talking to the customer. There have been so many lawsuits blaming the brokers or not discussing the coverage, not offering the optional benefits. Okay, there have been so many lawsuits I can show you. I do a lot of training in my brokerage, showing a lot of lawsuits against the brokers. Okay, I audit the calls in our brokerage. We record the calls, and many times, I would say 80% of the time, the broker will go through maybe one or two of the optional benefits, and then the rest of them, they just quietly skip. Okay, please take your time. Don't get into the E&O situation, errors and omission situation. One day it's going to affect you badly, and people have lost their licenses. Okay, now, with that said, every policy must provide the following action benefits. So in Ontario, for that matter, in any province or territory, they have action benefits mandatory coverage. Okay, we just simply cannot afford it, so it has to be mandated by the law, and it was mandated decades ago. Okay, so every policy must provide the following action benefits: income replacement if you're hurt in a car accident, you're not able to work, and if you at the time of the accident you were working, then you're losing income. Yes, so there'll be income replacement. Non-earner benefit, this person has no income from any source at all, okay, and now is hurt in a car accident. Yes, there's a non-earner benefit. Caregiver, the caregiver means that this person, your customer, now has become a full-time caregiver to maybe a disabled parent or a child or something. They cannot afford to engage someone and pay them. So this, your customer himself or herself has given up their job, and they are now taking up the caregiving of their, their parents who are full-time. Okay, and they're not receiving any benefit from the parents. They're not getting paid for that. So they are doing this, and if they're hurt in a car accident, your customer who is now a caregiver, there is some coverage. Okay, so we'll get to all the detail in a moment. So medical rehab and attendant care is huge. Okay, everybody who's hurt, they will need medical care, rehabilitation, physical therapy, chiropractic, and all of PS, personal support worker to help them and all of that. Okay. Then payment of other expenses, there are some educational expenses, some expenses of visitors will be covered in some cases. Okay, so those are some subsidiary payments, okay, supplementary payments. And also, God forbid, if the person dies in the car accident, there's a death and funeral benefits, okay, death benefit will be paid to the surviving spouse and dependents, and there are options to double the benefit, and also there'll be funeral benefits too. And of course, as I mentioned to you, there are so many different optional benefits that are being offered. Customers can purchase them by paying extra money. And it's very important you offer all the action benefits. And if the customer doesn't want to purchase, you document it. Offer the benefits and then customer decline to purchase. Okay, but you must offer these benefits according to provincial regulations. Okay, and also to do a service to your client, they should know, because in a moment I'm going to tell you how much of optional benefit they can purchase for such a low price. Okay, they can turn it, like for example, a 65,000 coverage to $1 million. Imagine that. 65,000, you can up that to $1 million. Okay, for non-catastrophic injury. We'll get to that in a moment. Okay, so it's extremely important you offer the optional benefit, explain to the client what are the options, and you offer them, and if they don't want to purchase, then you document it. Okay. Now, when you talk about action benefits, I know this may not be in CABE in your material, but I want to give you some context, okay? When you discuss action benefits, you must know 3 types of injuries in the context of car insurance, okay, automobile insurance. You should be well versed, familiar with 3 types of injuries. One is the minor injury, such as whiplash, sprain, strain, okay, contusion, abrasion, those kind of things. Nothing big, no big deal, okay? So just minor injuries. So all policy they provide, if the injury is determined to be minor, okay, then the maximum coverage the person will get is $3,500. And there are no options to increase that amount. That's it, period. $3,500. Okay, if the adjuster determined through medical report, whatever the process they use to determine the injury sustained by the customer in a car accident as minor, then they get $3,500 maximum. It's not that they're going to get they're going to get a check for $3,500. No. It doesn't work that way. So they will be given treatment, okay, up to $3,500 worth of treatment. Nobody's getting a check. Okay, they may be sent to a clinic or something, okay, to get the treatment, not the money, but up to $3,500 in medical and rehab benefit. That's the maximum. There's no option to increase this coverage. The next type of injury I wanted to know is called non-catastrophic injury. You can also call this as non-permanent. A good example could be even a broken bone. Okay, someone has a fracture during a car accident. Remember, all this happening during a car accident, okay? So you have a fracture. It may take a few months to recover, but then the person injured is fully expected to completely recover from it. That means it's a non-permanent injury, so non-catastrophic injury. So these are serious injuries, like a broken bone. However, these injuries are not permanent. The injured person is more likely to recover fully. Now, why you should be familiar with this? Because the amount we're going to discuss in a moment are quite different for non-catastrophic, non-permanent, and permanent injuries. Okay, so you need to know that for the exam, as well as to talk to your customers, you need to know, okay, how much is the amount. So what are the catastrophic? Of course, you already guessed it. They are permanent injuries. For example, in a car accident, let's say someone had a spinal cord injury. They may be paralyzed for the rest of their lives, from neck down, from waist down, whatever, okay? And loss of a limb, loss of the eyesight, like a permanent loss. It's a traumatic brain injuries for adults and children, amputations, ambulatory mobility, loss of vision. We're talking permanent, very serious stuff here, okay? Mental and behavioral impairments, they're also counted. and introduce a new process for combining physical and mental and behavioral impairments. So the coverage is not just for physical impairment, also for mental, okay? Physical, psychological, also both are included. A familiar phrase used with this type of injury is called pain and suffering, okay? Whenever you hear the term pain and suffering, I actually remember mentioning this in a previous lecture, maybe CABE or Rebo lecture. So this is referring to a catastrophic injury. It's not referring to a bodily pain. Of course, the bodily pain included here, but then we are talking much more than bodily pain. This is like a mental anguish. The person is completely, his life has been changed upside down because of the car accident. He's going to be sitting in a wheelchair for the rest of his life. Okay, so that's kind of a pain and suffering we're talking about. So three types of injuries: minor, non-catastrophic, and catastrophic, okay? Now, why are we talking about those things? Why do we have to know? So minor, okay, we already done with that, okay? $3,500 and that's it. So here is a chart from IBAO. I like the chart. I use this in my work, okay, for training staff. They laid it out very nicely here. So medical rehab attendant care benefit, there's an explanation. The second column, there's a little explanation which I like. For example, reimbursement for reasonable and necessary medical and rehab expenses like physical therapy, not covered by OHIP or group insurance plans. Because the automobile policy, always remember, it'll be the last one to respond, the last policy to respond. Because the adjuster will find out if you have any kind of other coverage through your employer, you have any other coverage. So that'll respond first, okay? If you're admitted in a hospital, of course, OHIP will take care of some of the things. Okay, not everything, but there'll be something will be covered by OHIP, okay? So this coverage will cover anything not covered by OHIP or group insurance plan. The attendant care, this is reimbursement for an attendant to look after you either at home. This will be like a personal support worker coming to your home, or if you're in the hospital, they'll come for an hour or two a day, and they will help you with the activities of daily living, okay, those kind of things. And so non-catastrophic injuries, there are minor injuries, sprains, whiplash, serious injuries, a broken bone. Now here, they did actually they made a mistake here in IBAO. I forgot to tell you about this. They should not have used this minor injuries under non-catastrophic, because minor injuries, you remember, $3,500, there's no chance of increasing. Then why would they put it here, like minor injuries? Whoever made this, they really made a mistake. Sprain, whiplash, it's not like non-catastrophic. Of course, they're non-permanent, even sprain and whiplash, but they are a totally different category. You cannot put it here and then say, oh, yeah, you're going to get $65,000. Okay. And so anyways, that's okay. You know that non-catastrophic is non-permanent, and catastrophic is permanent, like a loss of a limb, paraplegia, quadriplegia. You know, people are just totally, they are, what do you call it, completely paralyzed, okay? So what the coverage? You can see the third column gives you the coverage. So the coverage is the standard, okay? The third column under coverage is standard coverage that all policies in Ontario, every one of us will get this. Okay, so $65,000 every time a client gets injured in a car accident, $65,000 for medical rehab and attendant care for non-catastrophic injuries. See here, they don't mention minor. Thank God for that, okay? So non-catastrophic. Okay, give me 1 second. Actually, my wife is calling. I'm going to pause this one. All right, everyone, I just paused the recording just for a few minutes. We're going to start back here. So we are talking about the non-catastrophic. Everyone has this coverage. For standard benefit is $65,000 for medical rehab and attendant care every time you make a claim. And for catastrophic, so I'm on the third column under coverage, okay? 1 million. Any permanent injury, this is the 1 million coverage for everyone available in Ontario, okay? Now, so what are the options? This is very important that you know this for your customers as well as for the exam. So for non-catastrophic, there are two options. There are two options, but catastrophic, there's only one option. Remember that way, that's very easy to remember, okay? So what are the two options for non-catastrophic? You can double the 65,000 to 130. That's option number one. Option number two is fantastic. This is what we always suggest to our customers. You can make the 65 to 1 million. Okay, you make 65 1 million. Don't worry about what say add an additional 1 million for a total of 2 million for catastrophic. Don't worry about that. Yeah, they didn't do a good job there. Okay, this IBA, they didn't do a good job. So first option is to turn the 65 into 130. Okay. Second option, you can turn the 65 to 1 million. Okay. Now, if you go to the catastrophic, there's only one option. You can make the 1 million to 2 million. Okay. Now, what are they talking about? This add an additional 1 million for total, all this confusion there. What customers can do, they can combine the non-catastrophic and catastrophic together. So when they combine, like Aviva, they call that coverages all injury coverage, all injuries. That's the term they use. Okay, I like that. So when you combine non-catastrophic and catastrophic, what happens is you get 1 million for non-catastrophic and you get 2 million for catastrophic for a total of $3 million coverage. Okay, so let's just do this one more time. Okay, for non-catastrophic, you have standard benefit of 65,000 and you have two options. One, you can double that to 130,000, or you can make it all the way up to 1 million. For catastrophic, you only have one option. You can double the 1 million to 2 million. That's it. But then you have a third option where you can combine both the non-cat and the catastrophic. So if you combine that, you get 1 million non-catastrophic and you get 2 million for catastrophic for a total of 3 million coverage. Now, if you wanted to know, I have on my policy that combined cover. I'm with Aviva and I have this all injuries coverage for a combined like 3 million coverage. Okay, 1 million for non-catastrophic and 2 million for catastrophic. You know how much extra I'm paying for me and my wife for two people per year? Okay, I'm paying about $120. $120, which is like $10 a month, okay, for two people to increase the coverage so much more. And this is why I said to you in the beginning of this lecture, it would be a disservice if you don't offer this optional benefits to your customers. You're really doing a disservice because most of the injuries, we see the numbers coming up from all these adjusters, they happen between the non-catastrophic, like broken bone and things like that. Yes, there are catastrophic injuries, but then compared to non-catastrophic, there are not so many, okay? So if the customer can increase from 65 to 1 million, they benefit so much for a cheaper price. Like we are paying $10 a month for both of us, like $5 per person to increase it like 15 times the coverage. Okay, remember that. So now we go to caregiver. So I already explained to you what a caregiver is. This is not somebody who's wearing a white uniform with with the wearing lipstick and then coming to your home to take care of somebody. No, 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 no. This is your client. This is your customer has become a caregiver. She has given up her job and she's taking care of her parents, for example, okay? Now, what is the coverage? Reimbursement to hire someone to care for your dependents. Why do you have to hire someone? Because you as a caregiver, your customer is now injured in a car accident, okay? So what's the coverage? The coverage is $250 a week, but what's the catch there? I mean, for the first dependent, if you're taking care of one dependent, it's $250 a week. And then if you have additional dependents, you have $50 a week. It's not a huge coverage. But you see, this caregiver should have a catastrophic injury to get this money. Okay, remember this. The caregiver should have sustained a catastrophic injury to get this $250 a week. So what option she has? By paying extra money, she can extend the $250 even for non-catastrophic injuries. That's the option. Without the option, she has to be catastrophically injured to get this amount. So the same thing for housekeeping and home maintenance. Your customer is hurt in a car accident, and she's not able to do the activities of daily living like a housekeeping and home maintenance. She's not able to do it. She has to look for somebody, okay, to carry out the household responsibilities. And of course, she is looking for some money from the car policy. Yes, she will get $100 a week, but she has to be catastrophically injured. Like she should sustain a permanent injury to get this $100. How she can get it even for non-permanent? By option. Pay a couple of dollars more extra a month, and you can extend that $100 a week even for non-catastrophic injuries. Okay, so we covered 3. The next one is income replacement. So what coverage is automatically included in all policies? Or, okay, first of all, what the definition? A weekly income up to $400 begins 1 week after the accident occurs. So it's a weekly income up to $400, okay? So they should have just defined it in that second column. They should have just defined it. Why? Because when they 400, they're missing something, 70%, right? So anyway, if you go to the third column, how much the person is going to get? So this person has been working at the time of the accident, and so he's hurt now. So he's not, doesn't have income. So of course, he has to be paid something from the auto policy. Yes, there's some coverage. So how do you explain to the customer? It's 70% of the gross income, but you only get $400 a week maximum. So what if somebody is making like, 60, 70,000? Okay, 70% of 60,000, 50,000 is going to be a lot for a week, like more than 400. But the standard coverage is capped at 400. Remember this. It's not the 70% or 400. Some people would say that to the customer. It's wrong. 70%, but maximum 400 a week. So what options you have? Can you increase the 400? Because many people cannot maintain their family, with 400 a week, okay? Unless you're making like under like $25,000, okay? But anything, making 25 to 30 or more, which most people, then 400 is not going to cut it. So yes, you have option to increase it to 600 a week, 800, or even 1,000 a week. Those are the options you have. Dependent care. In the standard benefit, the government, they removed this. Hey, who cares about the dependent, right? Dependent, nothing. Kids, dependents, nobody's bothered about them. So the government, they just doing a so-called auto reform. They call this a reform. Okay, so they just removed it. That means if the customer wants any benefit for dependent care, they have to pay more. So every time there's an auto reform, the customer, they lose some coverage and they have to pay more. Believe me, every time. Okay. So what's a dependent care? Reimbursement for additional expenses to care for your dependents if you're employed and injured from a car accident. Can you imagine? You are a breadwinner in the family. You have to go to work to make a living. You're waiting for paycheck to paycheck. Okay. And now you have, you are injured in a car accident, so you have to care for your dependents. Okay. Now you are injured. So you're having a lot of problem. So there's no coverage in your car policy. That used to be coverage before the so-called auto reform. Okay. And now they removed it because dependents, who cares about dependents, right? So it's not even a big coverage. Like if you have to get this coverage, you have to pay more. And how much you get? Purchase up to 75 a week for the first dependent and 25 a week for additional dependents. You can buy them some lollipops, right? But the maximum 150 a week, regardless of how many dependents you have to care for, that's all you're going to get. And even for that, you have to pay extra money. Okay, so end of rant for now. So I get a little frustrated. I'll give you another example, okay? Look at this. Before we said the caregiver, right? I'm on the previous slide. You see this, it says here she has to be catastrophically injured to get the 250. But before the so-called auto reform, she was able to get for all injuries. That was reasonable, right? Because this person is given up her job, taking care of her parents, and she's sacrificing so much, and now you remove coverage from her. So she has to sit in a wheelchair herself for the rest of her life to get this $250 a week. Imagine that. Okay, so that's the auto reform, the so-called reform. What the reform there? You're taking away coverage from the people. Okay, so now she has to pay more to get the $250 even for non-catastrophic. That wasn't the case before the reform. Same with the housekeeping, and same here, dependent care. It used to be provided, and they just removed it. Okay, and they call it as a reform. Okay, death and funeral. The standard is $25,000 to the spouse and $10,000 to each dependent, and for funeral benefits $6,000, and you can double that by paying more. Okay, but except the funeral benefit, you can increase from $6,000 to $8,000. You cannot double it, but to the spouse and the dependent, you can double that by paying more. So what's this indexation benefit? The indexation, it actually comes from the consumer price index. And what is consumer price index? It is all about the rate of inflation. So at the beginning of each year, the provinces, they're going to calculate what is the consumer price index, the rate of inflation. And this is how the price keeps on going up. The dollar value keeps on going down and the price is going up. That's called inflation. Too much money chasing too few goods. This is, the father of economics, Adam Smith. He said back in the day, this is how he defined it. Too much money chasing too few goods. In other words, there was another guy called Lionel Robbins. So he was also another father of economics back in the day. And he said that, you have to carry basket full of money to the store and bring back pocket full of goods. That's the phrase that he used. Okay, basket full of money, because the money's value is going down and the price of commodity is going up. So what is this all about here? So let's say you're receiving $1,000 a week for income replacement, and you purchase the indexation benefit. So what will happen is, let's say you're going to the new year and you're still you're receiving the benefit. So when the new year starts, the adjuster will look at your file will be flagged because you purchased optional benefits. So the adjuster will look at the system. It's all computerized. The system will look at the rate of inflation at the beginning of the year, and let's say 6.7% in Ontario, for example. Okay, 6.7%. So it'll automatically add $67. Okay, to your income replacement. So let's say in my example, you're receiving 1,000, you're going to receive 1,067 if the rate of inflation is 6.7%. If 7%, then you're going to receive $1,070. So what it does is adjustment of benefits to account for changes in inflation. So that's the definition. Standard benefit doesn't provide it. So you have to pay extra money to get this benefit. So the total deductible, the amount here given the IBC slide is wrong, because I'm talking here now. I don't know when you're going to be listening to this, but today is June. Oh my God, what happened to me? Today is April 27th, 2023. Okay, if you're listening to this after like a year, the amount I'm going to tell you today is going to be different. Okay, just a caveat. So in 2023, the rate is $44,500. Okay, the deductible, $44,500. Remember this in 2023. 2024, depending on the inflation, it could be more. Okay, so what is this all about? Tort deductible. The word tort means, it's used in the common law provinces and common law countries. It's a civil wrong. Somebody has done something wrong to somebody else, and that somebody else now who has been wronged, taking this person to court. Okay, that's the background here. And what is the deductible all about? What the tort has got to do with the deductible here? Okay, let me give you a story. When you try to explain this to the customer, always, okay, give them an example. Otherwise, they will never understand this. Mr. Customer, let's say, God forbid, you are in an accident, okay, with someone else, and then that person caused you bodily injury, God forbid, okay? And then you sued that person. And now you're being awarded by the judge, let's say $100,000 for your injuries, compensation, which is a good news. Okay, you're being awarded. Okay, but the problem with that is you have to pay the court a deductible before you can get the $100,000. And in 2023, it's $44,500. Okay, 44,503 or something and some cents. Don't worry about it. Okay, you can Google it. Just go to Google and type in total deductible amount for 2023. You will get that. Okay, so it's 44. I know I sent out an email in January. I do that every year for my brokers, just for them to, when they talk to the customers, because some of them are still saying like, oh, Mr. Customer, you have 30,000 deductible, and if you purchase an option, you can register 20,000. That was like 15 years ago. Okay, today it's 44,000. So go back to my story. Okay, Mr. Customer, you're receiving 100,000, but before you can receive the money, you have to pay the court 44,500. And the customer is saying, why? Well, Mr. Customer, this is the court charges and everything, okay? And, you know, I know the customer is going to say, this is not fair and everything. It's not us. The province decided this, total deductible, okay? And so what is the option then? The option is if you if you're willing to pay some extra money to the insurance company, so you can buy this option called total deductible. If and when that comes to pass, the court case, you sued somebody, your customer sued somebody, they're receiving the $100,000, whatever amount, okay? Rather than paying 44,500, they only have to pay 34,500. You can reduce the deductible by 10,000 regardless of annual indexation, okay? So you can reduce it by 10,000. So you pay in 2023, if this happened, $34,500. So you're putting in your pocket 10,000. Okay, that's the way it works. Okay, all right. Now I'm just going to stop here. I know we already talked so much here, so I'm going to record part 2. Okay, because it's completely talking about different things. I don't want to mix up with the you know, with the action benefit, the options and everything. Okay, so just let this sink in your mind, and you have to kind of, some student, they memorize this, the amounts, you know, it's a good idea. Okay, just memorize it, write it down a few times so you will remember. Okay, you may get questions about these amounts, what the optional benefits for catastrophic injury, non-catastrophic, okay? Unit income replacement. So you need to know these amounts, okay? So I'll leave it at that. And I will see you in my next lecture, my friends. Thank you so much.